Dear students, I welcome you on behalf of Thakur Vidya Mandir High School and Junior College for the remote teaching learning process, where our motto is let learning be a joy and teaching a pleasure.
Let us move towards part 1 of chapter number 10, that is dividend and interest, wherein today we are going to understand the meaning and features of dividend as well as the legal provisions relating to the sources of dividend. Let us move towards our first question, that is explain or define the term dividend. In case the question is asked, this question could be asked as a 2 marks question. So let us understand what are we supposed to write for this answer. Before understanding the meaning of the term dividend, let us first see as to from where this word was derived. Just like so many words of English which originated from Latin language, even the term dividend is derived from the Latin word dividendum, the meaning for the same being one which is to be divided. It thus simply means anything which must be divided. Now, let us understand the simple meaning of the term dividend. In our chapter number 2, that is Sources of Corporate Finance, we have already learned that share capital represents owned capital and the shareholders are the owners of the company. Now, these shareholders provide necessary capital to company so as to carry on their business activities. Thus, the company needs to provide them something in return for their investment. Hence, it can be said that when the company distributes a part of profit of company amongst its shareholders, then such an income on their investment is called as dividend. Thus, dividend refers to that part of profit which a company pays out to its shareholders. Lastly, the definition of dividend has also been given by the Institute of Chartered Accountants of India, and it has defined dividend as distribution to shareholders out of the profits or reserves which are basically available for this purpose. So, accordingly, when the question relating to definition or concept of dividend is being asked, firstly, give the meaning as per the Latin civilization. Then give the simple meaning of the term dividend. And lastly, give the definition as given by Institute of Chartered Accountants of India. Let us now move towards the second question, which is define dividend and explain its features. Firstly, before moving towards the features, just in short, give a simple meaning of dividend. That is, you can write down dividend is that portion of the profit which is distributed among the shareholders as a return on their investment. In this way, by giving a simple meaning, you can just complete the part that is defined dividend, and then you shall move towards the features. Firstly, dividend is paid to the shareholders only out of the profits of the company. Thus, it actually represents part or portion of profits which is distributed among shareholders. Secondly, dividend is an unconditional payment which is made by the company, which means while making such payment, no terms and conditions can be kept by the company. Further, dividend can be paid only to shareholders, that is equity and preference shareholders, because dividend is a return on investment of shares, and as studied earlier there are only two types of shareholders, that is equity shareholders and preference shareholders. Accordingly, dividend can be paid only to the shareholders and not to anybody else. Next, Dividend cannot be declared out of the capital of the company. That is, only it can be declared out of the profits or the reserves of the company, which are basically meant for declaration of dividend. None of the companies can make use of their capital amount in order to declare dividend. It is prohibited as per the Companies Act. Further, a company can declare dividend only when it is recommended by the board of directors, as they are the supreme controlling authority in joint stock company, and also because they are very well aware of the financial position of the company. This clearly indicates that the power to recommend, that is to suggest the rate of dividend, lies only with the board of directors. Only they have the power, they have the authority to suggest as to what could be the rate of dividend which has to be given to the shareholders. Next, the board of directors can only recommend the dividend, but they cannot declare the same, as declaration of dividend requires approval of shareholders. Thus, the dividend which is recommended by the board of directors must be approved and declared by the shareholders through passing of an ordinary resolution at the annual general meeting of company. Let us now move towards the seventh feature, that is, the company cannot declare dividend for any of its previous year if the annual account of that particular year has already been approved by the shareholders in the annual general meeting. Nextly, once the dividend is approved and declared by the shareholders in the annual general meeting, it becomes a debt, that is liability for the company. The company is bound to pay such dividend under any conditions. It cannot be revoked, that is, it cannot be cancelled or it cannot be taken back. Further, dividend includes interim dividend. Now, basically, there are two types of dividend, that is, final dividend and interim dividend. Final dividend is that which is declared at the annual general meeting and paid after the closing of financial year, whereas interim dividend is that which is declared between two annual general meeting of company. Thus, dividend includes not only final dividend but it may also include interim dividend. However, unless and until specified, the dividend is always considered to be annual dividend only, or it is considered to be final dividend only. Next, dividend cannot be paid in kind, that is, it can be paid only in cash. Further, dividend can be paid only on the paid up value of shares. Paid up value is that which has actually been paid by shareholders. As such, dividend can be paid only on that value of share which is actually paid by the shareholders. It is not at all paid on that value of shares which is unpaid. Lastly, dividend cannot be paid even on calls which are paid in advance by the shareholders. Sometimes it may so happen that certain shareholders pay advance call money to the company. However, while paying dividend, the company does not pay dividend on such advance payment which is made by the shareholders, as the company on their side did not demand such a call money. So this clearly indicates that dividend can be paid only on the call money which has been actually demanded by the company. Thus, with this, we have completed all the 12 features of dividend. Let us now move towards the next topic, which speaks about legal provisions on dividend. As discussed earlier, legal provisions are those provisions which are clearly stated in the Companies Act. A company has to follow the rules and regulations, that is, the provisions which are specified in the Companies Act. Now, even while declaring dividend, it is compulsory on the part of the company to follow certain legal provisions. However, these provisions are divided into three categories. Let us see what are they. Firstly, the company needs to follow legal provisions relating to sources of dividend. Next, it also needs to follow legal provisions relating to declaration of dividend. Lastly, it also needs to follow provisions relating to payment of dividend. Now, today in this video, we are going to understand the legal provisions relating to the sources of dividend. So, accordingly, let us move towards our third question, which is explain the legal provisions relating to sources of dividend. Sources of dividend refers to the funds that can be utilized or that will be utilized for payment of dividend. Accordingly, a company needs to follow the provisions of the Companies Act 2013 while deciding or determining the sources of dividend. Thus, these legal provisions include: firstly, the company may declare and then pay dividend for any of its financial year out of the following. It can make use of current profits, that is the profits which has been earned by the company, but after providing for necessary depreciation and also transferring the necessary amount of funds to the reserves. The Companies Act says that a company cannot pay out the entire amount of profit in the form of dividend. Certain amount of profit must be transferred to reserves, and then whatever balance is remaining, it can be paid as dividend. Next, it can also make use of profits of any of its previous financial year, but again only after providing for depreciation. Further, in case of public limited company, sometimes when the company faces losses, then in such a case, the central government or the state government may provide necessary money, that is necessary funds, in order to pay dividend. Hence, in case of such companies, even they can utilize such money or such funds to pay dividend. Secondly, dividend can also be paid out of capital profits. Now over here, we need to understand about capital profits. Capital profits is that profits which is earned from sale of fixed assets at a price which is higher than the original cost of such asset. It also arises from the premium which is earned by the company whenever the company issues shares at premium. Now, a company can use even such capital profits for payment of dividend, but for that the company needs to fulfill certain conditions which includes the following. Firstly, the capital profit so earned must be actually realized in cash. Next, capital profit can be utilized only when the articles of association of company permits, that is, it allows for such a distribution of dividend out of the capital profits. Further, such profits remain as profit after revaluation of assets and liabilities. The term revaluation of assets and liability means determination of current values of assets and liabilities. The assets and liabilities are revalued as the current value may differ from the book value. Now, during this revaluation, the company may earn profits either by way of increase in value of assets, or it could be even reduction in value of liabilities. Thus, even such capital profits earned from revaluation of assets and liabilities, even they can be utilized for payment of dividend. Next, dividend cannot be paid out of capital, which we already discussed in features. Lastly, dividend can also be paid out of free reserves of company. As per the Companies Act 2013, free reserves means such reserves which as per the latest audited balance sheet of company are available for distribution as dividend. Thus, if a company has free reserves, then even such funds can be utilized for payment of dividend. So with this, we have completed the legal provisions relating to the sources of dividend. Now, in our next video, we are going to understand legal provisions relating to declaration of dividend and legal provisions relating to payment of dividend. Thank you, dear children, for your patience listening.